Earlier this month, we spoke with Fortune Brands, which is doing very well right now thanks to the housing shortage. But a little over a year ago, they spun off their cabinets business as MasterBrand. So how's that going? This is the largest manufacturer of residential cabinets in North America. You might know them as Mantra, Diamond, Omega, a lot of other brands too, if you're big on remodeling. Last month, they reported a better-than-expected quarter with a strong full-year forecast, and this stock gave you a nearly 97% return in 2023. It's now up 25% year-to-date already. So can it keep running? Let's check in with Dave Banyard. He is the president and CEO of MasterBrand to get better read on the situation. Mr. Banyard, welcome to Mad Money.
Thanks, Jim. Great to be here.
All right, first, this is your first time, and you have a terrific story, so I'm going to give you the floor to tell people why they should be buying the stock of MasterBrand.
Well, Jim, like you said, we're the largest in North America, but the reason that we're great is we cover the entire market. Our channel coverage, we have every channel that you can have in this market, plus we have the full product breadth. So you can buy everything from a very basic cabinet all the way up to a fully customized kitchen from us. And we do that with a great operational footprint and a great business system that drives our business.
Now, I want to talk about that because one of the things that's amazing is your free cash flow has almost doubled, even as your revenues have gone down.
Right.
Explain to people how it is possible to make so much money in a declining revenue environment.
Well, it really starts with the strategy that we built, and there's three big pillars to our strategy: align to grow, lead through lean, and tech-enabled. And they do work together. Align to grow is about getting everybody in the company, the organization, as well as our teams, aligned around what the customer needs. So you're delivering what they want.
Okay.
And then lead through lean is all about doing that in the most efficient possible way. I know you're familiar with lean manufacturing.
Sure.
We love lean manufacturing. I learned how to do that at Danher, and I brought it over here, and we've transformed this company in a way that we do things as efficiently as we can, and we empower our team to be able to do that.
Okay, it's very funny because when we went over, we said, oh my God, it's Danher Business Systems. He's doing Danher, which we think is, by the way, we have a big position, Danher, for my Travel Trust, because Danher Business Systems is about doing a thing. Well, go ahead, describe, because it's a remarkable way of doing business. It's not like anybody else.
And it's actually hard to do. I mean, the tools are all available to anybody on the internet. But really what it is, Jim, is it's the best associate engagement tool out there because you're empowering people to fix the work that they're doing. I'm not doing this. It's my team that's doing this. It's everybody on the plant floor. When they see something wrong, they have the tools to fix it.
Right.
And it's a really fun place to work when you do that.
Now, you've got to be on the lookout for acquisitions because you want to be in every nook and cranny. You can dominate this category.
Well, we were built by acquisition over the last, 20, 25 years. We've done that. Last year we really focused on using our cash to pay down debt. Obviously, when we spun, we had to pay a dividend to Fortune.
900.
Yeah, it was around 950
million. That was,
and
the fourth quarter was hurt by that interest charge.
Well, that's part of it. I mean, we didn't have debt before we spun, so you had to factor that in. But, we set our goal last year to really pay down debt and get ourselves into what we feel is a comfortable leverage ratio.
Okay.
Now that we're there, and we spent a lot of time last year building this, we think we have a good acquisition pipeline and there's opportunities out there. We'll use our cash for that if the opportunity arises, but there's still plenty of cabinet companies out there that we think are perhaps worth owning.
Okay, so I, as a potential shareholder, want to know what is the dealer channel, what is the retailer's home center, there we go, Home Depot, and what is the builder channel, and where would I find the different brands?
Yeah, so you really break the market into two big pieces.
Okay.
One is new construction, the other is repair and remodel. New construction, we go direct to the large builders, companies that I know you know well, Danher, Pulte, and then to some of them we service through distributors. So, and the weird part about cabinets is builders expect us to install the cabinets. So we do that in some cases when we're going to direct to a builder. In other cases, in other regions where we don't feel we have the efficiencies, we partner with the distributor, typically smaller privately held companies that help us do that with the large builders. Okay. So that's one portion of the market.
Okay, so let's say I want to be in the custom premium, a Star Market, Ultracraft, Omega. As rates come down, would I expect more people to gravitate toward that end?
I think it all depends on, first of all, the house that you own. I mean, you don't really want to make your house more expensive than it should be. So there's a variety of different.
Why wouldn't I want that?
I think that there's an element of, making your house look appropriate for the size that it is, the configuration that it is, and so forth. And the more custom you get is really designed for probably larger homes that have a lot of different spaces that are harder to work with, and you have to customize. You can get into a beautiful kitchen in the Aristocrat brand, as an example, without doing any customization. And so if you have a very standard-sized home, that's the better way to go. It's a more economical way for you to go as a consumer.
Now, you have a lot of technology, and the technology has also enabled you to make a lot more money per, let's say, per cabinet, correct?
Right. The technology for us is different than what you heard from Nick at Fortune Brands, in that they're developing digital products.
Yeah.
For us, technology is information. And how do we make information flow more seamlessly across the company and to our customers and to our consumers? So we were built through acquisition, a lot of disparate systems. Our data is in a lot of locked places, hard to get. We have all that information. We haven't used it effectively over the years, and that's what we're really working on with our tech-enabled initiative. And it helps us go faster on a lot of the initiatives that we're working on.
Okay, so let's say I believe that over the course of the next 18 months, we're going to start getting some rate cuts.
Yeah.
It seems from everything I've read that you definitely expect business to get better, as it's something that you're levered to.
Well, the new construction market's been doing great despite the rates, because the builders are helping by incentivizing buyers with that. But in the repair and remodel market, I think the key thing with rates there is stability. And you've seen that over the last 6 to 8 months. Rates have held, and now people start thinking, well, I know rates are coming down in the future. They're more confident in being able to borrow that money. You know, when you see rates going up in the future, or you see a lot of volatility, it's harder for the consumer to get their arms around borrowing money.
Well, I think people are getting a gem. I've always felt that because I've known this company for a very long time. This is a terrific story. Thank you for coming on. That's Dave Banyard, the president and CEO of MasterBrand. No, you haven't missed it. I know you think you may have because it's up a lot. But if rates come down, well, you just heard, it could be terrific for the remodeling business. Man, money's back to great.
Coming up, Cramer takes your calls. And the sky's the limit. It's a fast-fire lightning round. Next.